Okay, good afternoon, everybody. Let's start off just by seeing if you guys have any questions. So I'm going to try to answer questions only at the end of a couple of different sections that we'll go through today. So if you have any questions now, let's go ahead and answer some questions, and then we'll move on. So if you want to only see the paint bars and not the sub-panel volume indicator, you know, the histogram on the bottom, set this 01J show indicator plots to false, and then set the panel to the same as input series. Okay. And then, okay. And there you go. I'm going to get you a link to that, a screenshot of this. Here you go. Doesn't let me paste the link in there. What in the world? How bizarre. Well, there we go. All right, so I sent you just a link to the screenshot. If you need, if you need more time, you need to refer to that. All right, so on this workspace, you've got 1, 2, 3, 4, 5, 6 different charts here. You have a 400 tick chart for crude oil. You have one of these RTS bars here with a range of, minimum range of 2, maximum range of 8, minimum number of ticks, 600. Sorry, maximum number, what is that, 4,800? And then 90 seconds for the minimum times a maximum of 5, 450 seconds. Okay, this is the RTS bar here. See that big extreme density buying climax right there? It's actually where we shorted with the automated template in Blackbird and then bought it back right here. I actually shorted here and then took a stop and then shorted it again and then exited right here with this big selling climax followed by a churn bar on very high volume per second. So we'll go over the details of some of those trades today and why they were taken. Warren, you shouldn't have these workspaces actually. So again, these workspaces are just for the guys that own only the VolumeAnalyst and have that Ninjatrader 7 VolumeAnalyst installer. So I'm just going to go over the details of this workspace. The only difference between these workspaces and yours are that there is no Divergences Pro and they don't have the toolbar. So you have the 400 tick. You notice a few different indicators on here. You have the volume per second in the top panel and the volume input for the VolumeAnalyst in the bottom panel, the third panel. Okay, and then you notice a couple of different indicators on the price panel. You have average range in the top right, and then you have a counter for time and for ticks. And I've given you this one. Sorry, these two, the average range, the tick counter, time counter, and this midline plot just as a free bonus, and this chart identifier, little label indicator here, just to tell you the name of the chart and the size of it and whatnot. Stephen, limited view. It's a good segue. That's what I wanted to talk about next. Limited view. One of the things that takes up the most resources when you're opening up workspaces for the first time. I mean, it really is not a big deal after it's already open and everything is running. But initial load time for the workspace, much of that is governed by how much drawing the program has to do. Evidently, a lot of that drawing stuff in Ninja 8 is a lot better. But in Ninjatrader 7, we had issues with Workspaces taking, a significant portion of time to actually load. And this limited view makes it to where all that we're loading initially is what would be visible on that chart, on that portion of the chart. So this is what it looked like initially, and it's only loading what's visible there. So that cuts down dramatically on the load time when you're starting up the workspaces, and I think even connecting to data for the chart to load. So that's just to make it more efficient and load faster. If you want to see back further, then you just tap the F5 key and it will load all of the visible bars there. Okay, and if you want to go way back, scroll all the way to the back, and now you can scroll bar by bar moving forward. So it will load everything visible and to the right. Okay. And if you want to disable that, if you're not worried about load time because you don't have that many days back or that many charts or that many workspaces, you don't really care, then you can turn that off right here under the options menu. It's the first heading in the indicator properties there. Options, limited view. See? So we have the chart identifier, which is just a label. That's all it is. I'm not going to go over the details of that. It's pretty self-explanatory. Average range. This is maybe a little bit tricky because of the different settings here with the way that it's offset and how it spaces off of the X and Y axes. You can display. In ticks or points, I'm obviously using ticks here because I want to know, in number of ticks, what is the average size of the past 100 bars on top and then 400 bars on the bottom. So that little hot pink 5.4, that's the average range of the past 100 bars, and the silver one is the average range of the past 400 bars. 5.5 ticks, 5.5 ticks. It will highlight whichever one is larger in hot pink. Okay? And you can change those settings to whatever you want. The counter has a lot of different options, most of which you'll probably never use. But you do have alerts with it, and I think we just simply forgot to add in the sound alerts for the counter. I just completely overlooked it. It's not really something I use. I don't, make sound alerts when a bar is closing or something. But there is a folder for the sounds in the Ninjatrader 7 TTP. So we added our own folder here to the Ninjatrader 7 and 8 documents folder, and then you have screenshots and sounds. So I'll send those out in the next installer. We'll likely have another one next week with a couple of bug fixes. So you can read through these properties. I mean, it's not too complex or too complicated. But when it gets closer to completing, so it's a 400 tick chart, it's at the high end right now. When it gets down to between 25% and 0%, when it's, the last quarter, it will start to shift color, and it will blend the colors until it gets near complete, and it will make a little progress bar colored red around that. Just so you know, when the bar is getting close to closing, it will kind of highlight kind of pinkish in between red and dark salmon, and then closer to red, and then it closes and starts all over. So there's a lot of different ways that you can make it work. You can make it flash. You can make the alerts, make it start to flash different colors or whatever. It's actually a pretty cool little indicator. I don't really use it as much as, I don't use half of the things that we could use, but you can make it do all sorts of different stuff. So I'm not going to major on that The midpoint plot is simply showing you the midpoint of the day. All right, it's the developing 50% retracement, if you will, from the open, looking at the high minus the low divided by 2. That's the midpoint plot. All right, just the simple midpoint of the day. You see at the next session, it just moves right down to the open, and then it starts growing. Just a very simple little indicator. Just showing you the midpoint of the day. And here, the first subpanel, that's volume per second. Volume per second, obviously it's volume per second. It's telling you how fast the volume is coming in. But typically when you see a lot of volume per second, very, very fast volume per second, you have more participation. You have a lot more, basically you have a flurry of activity, a flurry of market orders coming in. And oftentimes we'll see very high volume per second coincide with smaller intraday swing highs and lows. Also, not necessarily, I shouldn't just, limit it to smaller retracements. We'll see very high volume per second at the ends of major swing highs and lows as well. Like we see a grouping of very high volume per second right around this swing high right here. All right, so the extreme volume per second is this deep, what is it called? Deep, I think it's just deep pink. And then the, I don't know what color you want to call that, royal blue kind of a color. So it's maybe a little bit hard to see. You can change the colors to whatever you want. Not sure exactly why I chose those two colors, but anyway, the extreme volume per second is pretty important. We'll see that quite often, like I said, at the ends of retracements. I guess I should qualify that. We're not necessarily, how should I put it? It's not that I have to have very high volume per second to get into a trade. It's not really a requirement for a trade. It's just giving me more information that I care to know. And if we have, along with all of our other volume signals at the areas that we're trading, if we have along with those volume signals some very high volume per second, then it just gives me that much more confidence. So you can go through the charts and see where and when you see very high volume per second. Oftentimes, just about every single time, you'll see high volume per second, extreme volume per second, as it were, coincide with breaks of swing highs and lows. So in this case right here, we're breaking that prior swing low. So undoubtedly, we have stops sitting right there. Most, I was going to say most retail traders, but a lot of traders in general, I mean, they're using market structure as a kind of a roadmap, will place their stops behind important swing highs and lows. Unfortunately, a lot of people do that, and orders gather there, and market makers can see those orders sitting there. And anytime you break a major swing high or low, you'll see extreme volume per second. Typically, it stops getting run. It's not necessarily that the stops are getting run on purpose, but that there are stops there and they're being hit, and therefore we have a huge number of market orders coming in at the same time. I'm not suggesting that there's people sitting there just waiting for you to place your stops behind a swing and then they're going to go get them. I mean, that's how a lot of people justify why they lost money today. Well, they were gunning for my stops. I think I've said that a time or two. But anyway, volume per second on Forex. Right. So on Forex, you're always using tick data, right? So it's total number of transactions coming in per second rather than total volume. Total volume on a tick chart, every bar is going to be the same height because you're not using volume, you're using total ticks. So volume per second on the tick chart is really the only thing that you can use with Forex on a tick chart. We'll go over the details of those Forex charts and those Forex workspaces in Ninja 8 and show you how that RTS bar will kind of do a hybrid of the seconds and the ticks and the range and there we can use the volume, and it does, meaning the volume input. It's still using total number of ticks for the calculation because, of course, like I said, Forex, like most of you guys know, we don't have volume data for Forex data. We just have the total number of transactions. All right, so we went over that tick chart. This is the RTS bars. You know what? Let's start from the hourly and work our way down. So another free indicator here. These are the pivot points, these horizontal lines here. So the WPP, that's the weekly pivot point. All right, these were some free indicators on our website in the free members area. They were created by a member of Big Mike's forum, just this one, the pivot points and the VWAP. The other ones we did. The weekly pivots, the daily pivots, the session VWAP, those were created by Fat Tails on Big Mike Trading Forum. And he let me put a lot of his indicators on my site a long time ago. And I just included those for you guys because we do use them, in the trading room. So these are the weekly pivot points. The PP is the pivot point. And that's the high plus low plus close divided by 3 of the prior session. High, low, and close of the prior, in this case, the prior week. Okay, the high, low, and close of the prior week divided by 3. That's the pivot point. The central pivot is the high plus the low of last week divided by 2. Central pivot is the midpoint of last week. The prior week VWAP, well, that's the average price of all of the contracts traded for the entire week. So this kind of little area right in here, we could kind of roughly say is, the quote unquote value area. It's basically the average kind of price of the prior week. So that's what this general vicinity is. It's not that any one of these are a particular area. It's just giving you a kind of a roadmap as to the range of the prior week. We're not trading based on these levels, okay? And then you have the prior week close, the prior week high, weekly resistance number 1, weekly support number 1, the prior week low, weekly support 2, weekly resistance 2. You can, you can Google pivot points if you want more information on that. I'm sure most of you know what pivot points are. And like I said, if you don't, you can YouTube and search or just Google it. All right, so on this 60-minute chart, I have the volume, the relative volume in the subpanel. And I'm displaying the bars with that chart style that we included with the RTS bars. It's just a high, low, and a close. So Ninja includes only the open, high, low, close, which will include the open, a little opening tick, and it's a tick left for the open, tick right for the close. I don't really like that look, so we added this little chart style here, and then it uses a little dot for the close, which is the way TradeStation used to do it, or I guess they still do it. So I always kind of like that look to it. High, low, close with a little dot for the close, and you can change the color of the close to, green for up closing or red for down closing, however you want to do that. So with the relative volume, where normally with candlesticks, coloring the body of the bar with the density, relative density, and the outline of the bar with the relative volume. The relative volume is the skinny bar on top. The relative density is the wider bar in the background. So the density is the volume per range. It's how dense that bar is with volume. We're dividing the volume by the range of the bar. In this case, it's relative density. So it's, we're doing the average volume per range for that bar, for that time period, doing the average volume per range of the past however many days. I think in this case, for the hourly chart, we're looking at the past 30 days or 24 days, 21 days. So this setting right here is telling you how many days back are we looking to run those calculations. In this case, 21 days. When we don't have candlesticks, all we can do is paint one color or the other. And in this case, I chose to paint it with the relative volume and not the density. Okay, so the density is the main input for the churn bars. Churn bars will always have high or extreme density. Okay, but we can have high density or extreme density for climax bars. It's just not necessarily required. Okay, so a churn bar has to have a narrower range than the prior bar. And we'll do one session this week where we're just talking about climax bars or just talking about churn bars. I'm just going to throw some, glossary terms at you and define them. Okay. So the churn bar will have a smaller range than the preceding bar. It'll have high density or extreme density, and that's pretty much it. We can throw in some other conditions to define how high the volume has to be, or there's a lot of other things that we could throw in there, but we're not going to talk about any of that today. And for the climax bars, and one more thing for the churn bars, we can have just a normal churn bar, which is yellow, and then the high density is spring green, or we can have an extreme churn bar, which is exceedingly high volume, high density bar, which is right here. This is a perfect example right here. That is an extreme, it's an extreme churn bar right there.
All right, so that extreme churn bar right there has extreme density, but it's also a very narrow ranging bar, okay? So there's two churn bars. There's the churn bar that's yellow, and then there's the extreme churn bar that's that violet red. So if you see a churn bar at a high, that's supply coming in at a high. If you see a churn bar at a low, that's demand coming in at a low. All right, you guys got that? Two churn bars, normal and extreme, just like two climax bars, normal and extreme. Churn bar at a low is demand coming in. Churn bar at a high is supply coming in. Doesn't necessarily mean that it's going to stop right there. I mean, there's nothing in the world that you can buy that's going to read the future for you, right? When we have, especially after a couple of different combinations with these volume signals, when we have these high density, extreme density churn bars at a high, that's coinciding again with these other things, such as an area in the market geometry or a slowing down of momentum, at least a couple of other factors, we have a much higher probability of the market turning from there than turning from just a normal average volume bar. So when we can identify supply coming in effectively, then we can anticipate what the next movement will be with an increase in probability. Increased probability, okay? Now a climax, you have two climaxes. Again, the normal climax, which is a high volume, wider ranging bar. It doesn't have to be, an extremely wide ranging bar, but in this case, it's significantly wider range than the preceding bar. And, look at this one. It's iffy if it's a, truly a climax because it has been kind of going down here a little bit to sideways, a little flag pattern there. But it is a buying climax showing up, buying climax closing on its high. The range is actually 4 or 5 times larger than the preceding bar, but it's really not an exceedingly wide-ranging bar, is it? It's actually pretty small. But when you compare it to the preceding bars, it's huge. Okay, so unless they're really, really wide-ranging bars and exceedingly high volume, they'll show up as blue. When they are exceedingly wide range and exceptionally high volume, they show up as that deep sky blue color. That's the extreme climax. All right, so those are the two bar color signals, which are split into 4. All right, and then you have here one variation on the climax, which is even though it is a wider ranging bar and very high relative volume, it's also very high density. So that's an extreme density climax there. All right, it's so high, the volume is so high that even when you divide it by the range of the bar, it's exceptionally high volume per range. That would be towering above all these preceding volume per range bars. Okay, with the VolumeAnalyst, we're only displaying that relative density plot for the signal bars, and only if they're extreme density or high density. All right, I'm throwing a lot of information at you, but I'm just trying to explain what you're seeing on the charts. And like I said, probably tomorrow we'll major on 1 or 2 signals for the entire session. We'll probably do churn for the first half, or climax for the first half, and then churn for the second half, so you fully understand what all I'm talking about here. All right, so a churn bar has to have high or extreme density, but a climax doesn't necessarily have to have high or extreme density. But when it does, if I can find, this is an hourly chart, a little bit different on an hourly chart. Let's look at something a little bit smaller. Let's look at the half hour here. And I'll explain, what is a high density or an extreme density climax. There's a number of other free indicators on this chart. All right, a selling climax, you see right here, we have a selling climax. And it's actually closing way up off of its low right here, isn't it? It's the last bar of the session. See, right here. But when you divide that volume by the range of the bar, it's really not that high a volume per range. It's not high enough to create a signal, okay? And here, we have a selling climax, but it's not high density or extreme density. And it continues lower here. Here, on the other hand, we have a buying climax, but when you divide that volume by the range of the bar, you have a high density signal there. It's actually closing well off of the highs. It's closing down here, below the midpoint of the bar. So on that bar, we do have pretty clear supply coming in right there. Okay? So there's something that we talked about yesterday, I talked about in the webinar. There's a 2-bar pattern that we identify, right? It's a buying climax followed by a churn bar. Let me lower this a little bit. You see this? This is that big buying climax followed by a churn bar right here. It's actually an extreme density churn bar. That's kind of the culmination of a completed buying climax. Okay? I'm going to have to think of a better way to name this stuff, because here I am saying that, well, this is a climax bar. This is actually a high density climax bar. And then I'm calling this kind of the completed cycle of a climax. Well, yeah, that's not very intuitive, is it? What I mean by this is when you have just a simple climax, it's maybe not necessarily high density, but just a normal climax like this. Here we have a selling climax. Let me see if I can find just a really nice example of that. If you just have the climax, but not necessarily high density or extreme density, then you haven't necessarily run into some very clear and visible, obvious supply at a high or demand at a low. So in this case, we have a huge, wide-ranging bar. And sometimes that's just a function of how wide-ranging the bar actually is. Right? In this case, it's a huge, wide-ranging bar, very high volume, high relative volume. All right, but you see it's 334%. All right, so for the range of that bar, that's really, that's high, but it's not so high that when we would divide the range of that, the volume by the range of that bar, we would end up with exceedingly high volume per range. Okay, so remember, volume per range is telling us the density of that bar, the makeup, Is it exceedingly high volume relative to the size of the bar? Or is the bar just really wide-ranging and fairly low volume per range, meaning how easy was it for price to move within that bar? How freely did it flow without any sort of resistance? If you have very, very high volume per range, well, that means that you had some pretty intense resistance within that move. Now, typically when people say resistance, they think of resistance at a high, support at a low. What I'm talking about is resistance within the move. I'm talking about ease of movement within that bar. Okay? So if you have a very wide-ranging bar, but it didn't necessarily take a lot of money, a lot of contracts to move the market that distance, well, then you had a very easy, it was a climax with very high ease of movement, if you want to call it. I don't know what else to call it. It just moves very freely with ease, okay? Total lack of resistance. But when you have very high volume per range, and it takes a lot of volume to move the market that distance, well, then you have very clear resistance. It doesn't move very easily. It's actually requiring a lot more volume now to move the market the same distance, you see? So that's how supply and demand works. And we need to know the density of the bar, the volume per range, how much volume was necessary to move the market that distance to have some idea as to what's happening within supply and demand. So when we see a big selling climax like this, that actually didn't take that much volume to produce, well, then we're automatically assuming that, we don't have a clear edge here trying to forecast a swing low. It's probably likely to continue lower, okay? But when we see something like this, where we have exceptionally high volume, still a wide-ranging bar, but exceptionally high volume, so high that when you divide it by the range of the bar, you have that high density signal there. Well, then we know that we've run into supply. We have some tremendous resistance coming in. Okay. So that resistance, that high volume per range, it may not necessarily happen within the same bar, within the climax bar. Because remember, the bars are really, they close at fixed times. I don't care about what's happening in the market if it's in a buying climax or a selling climax. Sometimes you might get the completed move where you get the big wide-ranging high-volume bar that finally runs into real strong resistance supply that then creates that narrow-ranging high-volume churn bar. Sometimes you get that with a nice 2-bar pattern like this. And sometimes you just get this, where it's just a high-density or extreme-density climax. And that second bar that we like to see with our little 2-bar pattern is actually inside of this bar at the top of it, where you have a huge amount of volume up there in that top quarter of the candle. Is this making sense to you guys? This is really the most important aspect of understanding how volume affects the market and price action. So it's really imperative that you get this stuff down. I'll repeat it over and over and over this week. But it's kind of important that you understand this stuff. So the first panel indicator on this, let's see, 340. I guess that was a while ago. We'll go over some of these other indicators in a minute. But what I wanted to kind of drive home was the difference between a climax, just a normal climax without any density signal, and a climax that also has high density or extreme density. Okay. So you can see here, we're kind of chopping off the top of those bars, right? Chopping off the top of those bars there. Why are we doing that? We're doing that because if we don't, then it auto scales according to the highest volume on the chart. And then we can't really see the difference as well between, the change in volume from one bar to the next. And it's not, it doesn't necessarily, you don't necessarily have to see a huge change from one bar to the next for it to be significant. Even just a small change in volume, like from here to here, is quite significant. But when you've got something like this, 720% on a 10-minute chart, well, that's obviously some pretty big hands are stepping in there, some pretty deep pockets there. Okay, so that's what we're interested in identifying is some of these really high volume events, high relative volume events, because remember, they can sort of hide their volume. The guys with the deep pockets that are oftentimes creating these swing highs and lows, they can sort of hide their activity when trading outside of the market. It doesn't necessarily show up as conspicuously, a little less conspicuous. So this might actually not be a huge true raw volume bar. In this case, it probably is. But here, 720%, what does that mean? That means it's 720% greater volume here for this bar than would normally trade for this time of day, this 10-minute bar. Okay? So that's 7 times greater. What is it? 8 times greater. 6 times greater than normal. I can't even do math right now. So understanding the difference between those different climaxes, high density, extreme density climax, or just a normal climax, is pretty key. Okay? I put a lot less stock, a lot less faith in a climax that looks like that than one that looks like this, which has high density, just like right here. Here we've got a climax, but it's a high density climax. Is this clear? Anybody need any clarification or some other example? So right here we have that 2-bar pattern, right? Well, I would put even more stock in this because it's a 2-bar pattern where the climax is actually a high density climax. So the supply was already, you had already hit supply up in here somewhere on the climax bar, and then you've got another 10-minute bar where it's chopping back and forth there, churn bar, chopping back and forth with a ton of volume, obviously run into some, very clear supply. And one more bar creeps a little bit higher, and then what does it do? It closes on its low right there, and then rolls over. Okay. So one other thing that we're doing, I didn't finish talking about how we chop off the top of that. So we want to be able to see those differences between the bars. So we actually auto scale rather than based on the highest relative volume bar. We auto scale based on the average. Okay. So we can see the variance from one bar to the next a little better. So here it looks like these 2 bars are the same size, but in fact, when a bar is chopped off, we'll tell you what size it is. This is 600%. This is 327%. You can make these numbers or these fonts as large as you want. This one's 587. You see, this one's 720. So this is the really big one right here. I mean, that's perfect right there. Big, massive climax followed by a churn bar. You can't ask for any more obvious sign of supply coming into the market right there. Yeah, Kim, there are pictures in the PDF in the user guide. They've been in there for, I think about 4 or 5 months in the members area in the, under the link that says user guides. So you can download that from the members area and it'll show you screenshots of all of these different signals. Here's another buying climax followed by a churn bar. It's another 2-bar pattern. Buying climax followed by a churn bar, the one we were just talking about. So another thing that we're looking at, independently of whether it's a buying climax, selling climax, or a churn bar or whatever, is the spikes in volume. Okay, is it an extreme spike, a major spike, a minor spike? And you can turn those on or off right here. Select the volume spikes to calculate. So the volume divergence is actually built from the spikes in volume, and I'll explain that momentarily once I get through these workspaces here. So you can show just the extreme spikes, which is the diamond there, the major spikes, which are the little dots, or all three, where you have, for the minor spike, a little dot right there. And, you know, even if you didn't have a PDF that tells you what the name of the signals are, it tells you right here. But there is a user guide in the members area. So we've added in these text alerts. And then you can turn on the sound alerts, email alerts. You can send yourself screenshots, email yourself screenshots. We don't have a lot of the alerts turned on. There's text alerts for Ninja 8, but there's not, I don't think the email is hooked up yet. Or the sounds, maybe. I don't think the sounds are hooked up yet. So there's a couple of things in the Ninja 8 version that needs to be turned on. So here we have these numbers. Those are looking at the relative range, or sorry, in this case, just the range of the bar. I think it might be relative range. Let's see. Yeah, on this chart was a 30-minute, and I changed it to a 10, so let's change it back. So that's a big, massive, extreme density churn bar right there at the high of the day in crude oil. So this is another reason why we use multiple time frames, because, you know, the volume is spread out, and like I was talking yesterday, trend is a function of time frame, and your trade is, you know, what size chart would you say that the trade is occurring on? If you're only trading one chart, well then every trade that you take, according to you, is on your one time frame. But in fact, you may not necessarily know or understand what size of a retracement it is compared to the overall trend, or what position it's in. You know, how many bars, how much time makes up the retracement, how deep is the retracement, all these other factors that are a function of time and chart style and type, chart type. So there's all these different things that most people never even think about. But when you take those into account and you identify at least how much time or how many bars make up the retracement or the correction, then you realize that, well, I'm not really getting the full picture here with just my one or two charts. So it may seem like a lot to trade 6 charts with one market, but when it comes to volume analysis especially, you need those extra charts. You don't have to, you know, you don't have to watch every single tick of what's happening on every chart, but you need to be able to see the volume data relative to the range of the bar through those different lenses that each chart gives you. Does that make sense? Because I wouldn't have seen this extreme density churn bar there for this 30-minute chart. Well, technically, but you know, it's a lot more, it stands out a lot more on that 30-minute chart. Whereas on the 10-minute chart, it's actually a 2-bar pattern that still kind of drifts higher a little bit and sideways for a little bit longer. But here on the 30-minute chart, it's a, you know, picture perfect, crystal clear, extreme density churn bar there. All right, so the numbers, back to the numbers are looking at relative range. So the range, of course, is the high minus the low. It's the size of the bar. Relative range is removing the variance between the sessions, removing the seasonality within the session, and just looking at the current range relative to the average range for that time period. The cyan and the dark blue are looking at wide-ranging bars. wide-ranging bars. Okay, there's different settings here, and you can change the colors to whatever you want. I'm not going to try to spend too much time on the range. Just to explain what the numbers mean, you have extremely wide-ranging bars, dark turquoise, extremely wide-ranging outside bar. So an outside bar has a high that's higher than the previous high, a low that's lower than the previous low. Okay, and you have all these various settings here for each, which are in the user guide for Ninja 7. Most of these properties are the same. In Ninja 8, we've just added new ones. Okay, so that user guide in for Ninja 7 is also useful for Ninja 8. We've just added some new properties, and we'll update that guide here within the next few days. Okay. So you should have access to that within your members area. If you don't, let me grab it for you. Well, you do, but I mean, if you don't haven't seen it, or you don't have it in front of you, let me just grab it for you. The range for the relative range is looking at, so this 10 means that it's bigger than the past 10 bars. The blue 10, the little 12, the yellow 12 here, little 12, the yellow 12 means that it's smaller. It's a narrower relative range, not true range. So it may not necessarily match with your vision here, what you're seeing on the chart. 12 means that it's smaller relative range than the past 12 bars. So this is the quick start guide for Ninja 8 here. That's just to get you started with Ninja 8. And then the user guide for Ninja 7. 1 second. Indicator reader. Clint, do you have it, or Josh? You have it right there? I'm having to search through all the... Here's the one from July. I think we have a newer one than this. Here's one from July, which will have all the screenshots and labels of the VolumeAnalyst user guide. Let me just see if this one is newer here. Yeah, I guess that one's got it. And we'll update the user guide for Ninja 8 once we sort out these properties. All right, so with the relative range, again, you're looking at not necessarily the current, the range that you're seeing on the chart, but the relative range. How does that range compare to the average range for that time period? Okay, so that's what you're seeing with the numbers. And this cloud-looking pink cloud here is looking at the average daily range. So that means that this is the average size, the average range of a daily bar. And you're looking at, I think it's the average range of the past 20 bars. Okay, so that's the average range of the daily chart and average daily range. All right, so the way that you see it moving, the average range depends on how far above the open or how far below the open price has moved. Okay, so if we start moving up from the open, you'll see the average daily range start moving up with price. Once we start moving below the open, which is right here, you'll see it start to move down. And then we move down here, and it moves down here. You see? So it starts off this wide because price could move up that far from the open, right? So from the open, this could be the full size of the daily bar. So that's the average daily range right there. Okay, it could move up to that upper band or down to that lower band. Okay, so it's based on the open of the day, how it plots. And then by the end of the day, you see it kind of converges there, depending upon how far above the open we've moved or how far below the open we've moved. These little silver bands here are what's called the average daily noise. Average daily noise. So if the market moves from the open, imagine this is the open. If the market moves down this much from the open and then trends up for the rest of the day, from the open to the high, well, that's the trending move of the day. And this would be considered the daily noise. The daily noise. So it opened up, moved straight down, stopped, and then trended up all day. That movement down would be considered the average, or that movement would be considered the daily noise. And then these silver bands here are displaying that information. So this would be from the open, that would be the average size of the daily noise. You see? And that's how that works. And it's based on the open, and that's it. So you won't see it move from the open. It's just based on the open, the width of it. Okay? And it marks the high of the day, the midpoint of the day, and the open of the day, and the low of the day. All right, so that's the workspace for the full layout for Ninja 7. And then the 5-minute chart has the daily pivot points There's the low of the day, the close of the day, the VWAP, the pivot point, the central pivot, resistance 1, support 1, and the relative volume with the volume divergence, obviously. So you have a 400 tick chart, the RTS hybrid, 932 tick chart, a 30-minute, a 60-minute, and a 5-minute. I spent a lot more time on this than I planned, but at least I explained a lot of the signals, which I think is pretty important. No, you don't use the 24/7 template. You can't use the 24/7 template. That's the worst template to use because you're dividing the session into, it doesn't make sense to divide the session at midnight. So the 24/7 session template divides the market into 24-hour periods based on midnight, which midnight is meaningless. Nothing happens at midnight. So you always want to use the default session or the RTH session. So the default session is the ETH session, the electronically traded hours, or the extended trading hours. And then the RTH session is the regular trading hours. If you use the 24-hour session, the relative volume will not display. It throws an error, okay? Yeah, so on our trading charts that we have in the room, we have lower time frame workspaces, and we have, lower time frame workspace and a higher time frame workspace. In the higher time frame workspace, I include a chart that also has the RTH session, the regular trading hours. So you always want to use exchange time for the session, for creating the start and end of the session. When does it actually close? That's when you want to close it, when the exchange closes it. If you use a 24-hour session, it won't plot because it's dividing the Sunday night session. It's closing that at midnight, and then it messes everything up from there. All right, the RTS bar here for crude oil, this crude oil workspace. Minimum is 2 for the range. Maximum is a multiple of 8. Okay, so we went over this a little bit. 2,000 bars. It's looking at the volume input in the bottom, volume per second right here. The other indicator you see on here is the VWAP. So this is the running average, running summation of all the contracts traded at every price. Yes, Henry, this is being recorded. We'll send it out tomorrow. So this is the average, the running average of every contract traded at every price. So it tells you the running average price of the day, the volume weighted average price. Top band is overbought, quote unquote overbought. It's the second standard deviation. It's the bottom part of the band. Top part is the third standard deviation. Same thing in the bottom. The first standard deviation above, first standard deviation below is that little silver gray kind of a cloud. So this is, for volume profile traders, this is quote unquote the developing value area based on the VWAP, based on the volume weighted average price, not the volume profile. So it's just another tool for giving you kind of an average price and how far price has, how volatile price is throughout the session relative to that average for the standard deviation bands. Okay, the volume divergence is using the extreme spikes and the major spikes on this template. Yeah, I think it's just using the extreme spikes. But anyway, what you're looking for in the volume divergence, you're looking for that extreme spike at the initial swing, which is this swing. And then you're waiting for a sign of weakness after that. And if you right click on these buttons up at the top, you'll see all of your other options here. So we're looking for the extreme spike and then a pullback, retracement. And you can see where that pullback occurs after the spike if you turn on that little blue line. This is basically just for testing purposes, really, for seeing, where that pullback condition was met and if you need to increase it or decrease it or whatever, depending on what you're trying to see with it. So you can turn on, you can modify the visuals here. And there's a couple of other settings here. Show the resistance lines, show the support lines. So this is something I used to use when we didn't have fully automated volume divergence. Now that we do have automated volume divergence, I don't really turn them on. I don't necessarily need them. But you can plot a resistance line from the extreme spikes at the highs or a support line from the extreme spikes at the lows. Okay, and it will plot until the next extreme spike. So you see this one plots until the next extreme spike, which is here, and then it'll continue to plot until the next one. So this one plots at the high here, then we get a new one, it plots, then we get a new one, and it continues to plot. You see? So those lines can potentially act as support and resistance, but I don't really use them necessarily for trading decisions, so I don't really show them. So we're looking for that extreme spike, a pullback, and then go back up and test that swing high on lower volume. And here we do that. And finally at the high, we actually have very low volume, and then it rolls over. So the little circles mark the setup bars. All right, so on every bar that has a circle above it, we have a volume divergence setup. So in real time, it plots like this. See, with a dashed line. You can show those setup objects or not. You see? I can turn them on or off. You can show the trigger arrows or not. But here, once we move down a certain amount, and you can change all of that within the volume divergence trigger settings, you can have different requirements for when it will trigger. Here, it moves down enough, you break the prior low of the bar, you close below it, and it throws a trigger. When it goes back up, if you've still met the conditions for the volume divergence, well, then it'll throw another setup, and then once price moves far enough, meets the conditions, it throws the trigger, okay? And then the line becomes solid, right? And this is all on Ninja 7. Yeah, what's the benefit of using the premium VWAP? I couldn't tell you. Probably alerts and who knows? I don't really know. It's not necessary. For me, it's not like I'm, necessarily basing trades per se. That it's not like it has to be a requirement for a trade. But if the market has been trending down the past couple of days, and then we get a nice ABC back up, and we're into the cloud up in here, we're overbought on the session VWAP. Well, then that's a little added bonus, if you will. I mean, it's like a kind of a rating system for +1 or +2 or whatever, however you want to say it. Just a little added confirmation. It's one more reason for the trade, basically. And in this case, I think we were well above that top of that channel, so we're kind of overthrowing the top of that channel. But anyway, this is the RTS bars chart. All right, that's it for that layout for the Ninjatrader 7. Let's go over just a couple of trades that we took today and the reasons for them. So the main trade that we had today was actually in NASDAQ. We had a few trades. All right, so at this point, we were about to be opening up right at 8:30 Central, and we were looking for a reason to get long, and we finally got that. So we had multiple areas coming together down here for the long. The main one being the perfect hit of a trend line. I mean, that's about as obvious as it gets right there. So perfect low to low, right down to the trend line. Really massive correction here in the NASDAQ. And came right down to the warning line of this little upsloping channel here, parallel of the center median line from the low before the high right here. Anyway, a bunch of stuff that maybe many of you guys don't fully know about. Here we have a huge volume divergence on the hourly chart. Big, wide-ranging selling climax, and then another selling climax, wide-ranging, but much, much smaller. You see? So that all happened before the open. And, 5 o'clock in the morning, we have a huge selling climax and then a churn bar, a couple of bars later right in here, and that starts turning us up right there. So this is just before the open. We're looking for any reason to get long. The main area that we would have for a high or low would be this upsloping lower median line here. Okay, so we had that, and I think I've already erased it from here. But anyway, we had where was it? It's not that one. I think it was here on the 5-minute actually. Yeah. So we had that center median line right there. So we actually went through that a little bit right into the upsloping lower median line right there. All right, so we had that. This is a 5-minute chart, so you didn't have a whole lot of time to react there. So I've actually gotten into this thing a couple of times. I got into it here, and then took 3/4 of the position off up in here, and then I started buying it back right in here. So I had 20 here, took 15 off, had 5 left, bought 5, and then bought 5 more. So I'm back to 3/4 position here. So anyway, to confirm that area, especially right at the open like that, you're going to have a huge amount of volume per second come in right at the open, of course, but to do anything at the open with, the NASDAQ or the ES, anything with a huge amount of volume and volatility right at the open, you really have to have some sort of tick chart or, something like what we have here with these RTS bars. So all the areas in the market geometry came together right here, which that's the higher low. And then we had the massive extreme spike. It's a selling climax, but it's an extreme density selling climax. It actually closed up on its high. So that was the bar on which we got the signal in the market geometry. And then over here, that high density, extreme density climax there is actually 2 extreme density climax bars back to back. And that was where Blackbird throws that signal. I actually got in a couple of bars late right in here, I think. Let me show it here. Yeah, right there. After it started turning up a little bit. I got in a little bit late. Because I didn't have, I didn't change the color of one of those lines on the 5-minute. And that's what kept it from entering that one automatically for me. So anyway, that's the long in NASDAQ. And in the 6E, I'm long right now from this low. I had gotten long earlier. What in the world? No, I had gotten short earlier right here. I got short here. And then I closed it right here before it took off and broke the low. I don't know why I did that.
And then once I see this, with this high density climax here, right into all of these areas with a 2-bar pattern on the 15-minute here. To show you the different areas here. You're at the VWAP from the low. This is the swing low. Let me just turn off some of this stuff here. So you're at the VWAP from the low. You've ticked out this low here. I just basically want to get back to the underside of this line. I'm thinking it's still going to go down and make one more low. You're at the VWAP. You've taken out that prior swing low, and then you made it down to this bottom of this channel here. Right? This is just the high before that gap down on Sunday night. So we actually broke through the bottom of that channel right into the average daily range low. You see it? That's the average daily range low, that pink area there that I was showing you a little while ago. Selling climax followed by a churn bar right there. It's actually a volume divergence. And let's see here. Volume divergence is showing up on the tick chart as well. It's bullish divergence on the 15-minute tick chart and the RTS bar. And it's got a nice 5 waves down to completion. So it even has a nice subdivision in the waves. See? Right into that center median line there. So I went ahead and took that one about midday. And I'm not expecting that is necessarily the low, but it could be. I'm kind of shooting for one more low, but anyway, what time is it? I'm gonna go ahead and close this now. Yeah.
Order filled.
So let's see, how much is that? I had more earlier. It's really not that much. That would be like $1,000 if you were trading 2 contracts, because I've been trading 20. So that'd be like $500 if you were trading 1 contract. But I still have NASDAQ on. So NASDAQ could still, it could still go up a pretty good ways. It's up it's up $5 grand right now. So NASDAQ could actually keep on going. So anyway, that's what happened today. And that's trading volume and market geometry and momentum divergence. So it's already at what, an hour and 40 minutes. I'm going to wait to go into all the stuff for Ninja 8 tomorrow. I mean, we did some of that yesterday, but we'll go into the details of the Ninja 8 workspaces tomorrow. I will finish by showing you the reader that I told you to, and then we'll take some questions. Dave, did you have a question about one of these indicators on the first panel? This is the average range here. Let me turn the spotlight on. This is average range. It's looking at the average size of the bar, the past 100 bars in the top, past 400 bars in the bottom. And then some of these other charts have a counter indicator on them. When the markets are closed, the counter will not display. All right, so we have two other workspaces that are just pretty simple workspaces here. Just to show you a couple of examples inside of Bloodhound. So if you don't have Bloodhound, then you won't see, obviously you won't have Bloodhound in the sub panel. And all we're looking at are 2-bar patterns here. So this is a Bloodhound template that has the reader, VolumeAnalyst reader in it. Okay, the VolumeAnalyst reader allows us to read the signals from any chart on any other workspace. So I could actually bring in the signals from that other workspace, from the 30-minute chart, from the hourly chart, from whatever, and combine all of those into some sort of automated system or semi-automated signal. Okay, so the VolumeAnalyst reader here from the list, your TTP, you've got the average range counter. Those are the two free ones. Then you have a reader manager, and then you have the VolumeAnalyst reader and the VolumeAnalyst here. Okay, the reader manager is also included with the VolumeAnalyst. We'll save that for Thursday. But the VolumeAnalyst reader, again, allows us to read the signals from any chart, any workspace into Bloodhound. Right? You could even plot them on another chart if you wanted to in the subpanel, but all it does is it just shows a +1 or a -1 or whatever the values for the signals are. Those will be the numbers that it will plot, okay, as a bar or a line or something. But inside of Bloodhound, we just simply want to access the signals, and each signal is associated with a specific data series, a specific number. All right, so here in this getting started guide here, if you want to learn how to use this thing inside of Bloodhound, you have what are called bar codes for the different buying Climax, selling Climax, whatever. You have several different barcodes. You have the primary barcode, which is going to show you the extreme Climax, the extreme Churn. Okay, basically just the volume plot when we're talking about relative volume. Secondary barcode is going to show you the density signals. Okay, the signals for that density plot. And then the combined barcode, if we want to show high density climaxes or extreme density. So all of this stuff that I'm showing you now is pretty advanced, and it's for people that want to develop signals or semi-automated or automated trading strategies inside of Bloodhound or Blackbird. So this is pretty high level stuff here. The 2-bar patterns, those have their own data series as well, which is what this one is set to. You guys got that? So the reader will let you access those signals from all these different data series within the VolumeAnalyst. The most important ones being the primary, the secondary, the combined, the 2-bar patterns, the volume spike, and the volume divergence setup and trigger. And all of those are in that document I just showed you. So this VolumeAnalyst reader, we have it set to 2-bar pattern, and we're looking at these values here. Okay, I won't go into all the details of of using Bloodhound right now. So that's how the volume analyst reader works. You choose the data series and then you set the solver up inside of Bloodhound accordingly. It's incredible the signals that we had today in crude oil. Beautiful swing low. Obvious swing high. We shorted this, and then a big selling climax, high density climax, which stopped on a dime, which is right where we exited. Or I should have gone long, but exited. And then a big buying climax followed by extreme density at the high. Pretty cool. So you have one more workspace like that, which just shows you another example where you're actually looking at two charts. A 5-minute and a 932 tick. And this is, these workspaces are only for the guys that have the volume analyst and only the volume analyst. This doesn't really pertain to you guys that have the master suite, because you guys have the big workspaces that have all of the indicators on them and the Bloodhound templates and the Blackbird templates. This is child's play compared to what you guys have. I shouldn't say child's play. This is awesome stuff, but the master suite ultimate guys have the Divergences Pro, the indicator reader, all of my Bloodhound strategy templates for the market geometry, and all of my Blackbird templates. So this has only the volume analyst and one Blackbird template that shows you how to combine the signals. So this is mostly for just giving you a demonstration of how the readers work. All right, one is accessing the other chart, the 932 tick chart. Here, it's accessing the extreme volume per second, and the other one is accessing high or extreme density. So it's showing you how to combine two signals together for a different signal. So here we have one of those signals at the low of the day. And then we had one here on a breakout, actually, so not so good. And then we had one here. This is probably the best one of the day. This one and the low of the day. And then we had one here on another little breakout of that swing high. So we'll pick this up again tomorrow afternoon, and we'll go into Ninja 8, and we'll go through those workspaces thoroughly. And then, what was that, Wednesday? And then Thursday, we'll major on the Climax and the Churn bars.